Thank you, and thank you everybody for being in here at this late stage of the day to hear a little bit about our ASX-listed gold explorer and developer focused on projects, two projects, one of them in Ecuador and the other one a more advanced stage project in British Columbia in Canada. Just a little bit about the company. Tempus, we listed on the ASX last year, code TMR. We raised $5 million at that point. We had some listing projects at that stage, copper projects in Australia, but the aim of the board of Tempus was to look further afield and look particularly at gold projects, given that we saw a bit of a run coming in the gold price at that time, and it certainly has eventuated between then and now. If you look at our top shareholders there, we're very well incentivised within the board and the management of the company, holding significant stakes, all of our key management personnel and the board of directors. We've got only 40.8 million shares on issue, which for an Australian company is very small. It's about as small as you really get. Market cap around 7 million as at today's price, and with about 3.3 million Australian dollars in cash in the bank at the moment. So a little bit about the board. Chairman Alex Molyneux, who many of you will know. We've got there, just as it worked out, we had Gary Artmont and Kevin Peepgrass come onto our management team and board off the back of our Ecuadorian project acquisition, on the basis that they had a lot to do with South American assets, and Gary in particular had worked on the Ecuadorian asset previously. And then Kevin has subsequently brought the Canadian asset opportunity to our attention. So the Blackdome-Elizabeth Gold Project is now our flagship project. This acquisition just completed, in fact, last weekend. So this is the first time I've been out talking about this asset on the basis that we now own 100% of the asset. The key things about the Blackdome-Elizabeth project are it's a past producer. It's produced between 1986 and 1991, predominantly produced 230,000 ounces at a grade of around 20 grams per tonne, so high grade. It last produced in 1999, shutting down in those periods there due to the low gold price at the time. Obviously, gold price now significantly higher, so the project starts to look very, very attractive given the current pricing. The project has about 300,000 ounces or so of NI 43-101 compliant resources. They were declared in 2010. So the first thing that we're doing now that we've completed the acquisition is that we're going to add in the 80 additional holes that were drilled in the last time this project was drilled, which was 2011. We're going to add those into the existing NI 43-101 resource, and we're going to update that and report that to the Australian JORC standard. That'll happen in January of 2020, so a couple of months away. What we're going to do is we're going to advance the PFS on the base case project, which is the 300,000 ounces. The mill there is a 300 tonne per day mill that we have as part of the project that's currently on care and maintenance. So it's what we think is a nice, what we're going to call our phase one of the project. The focus really is going to be, though, as we progress that PFS next year on the base case project, to really try and expand that 300,000 ounce resource up to what we think can be eventually 1 million ounce plus of resources at the project. So location, we're in British Columbia, 200 kilometres north of Vancouver as the crow flies. In the region there, the key past producing mine there would be the Braylorn gold mine, which produced 4.2 million ounces over many decades at around about the similar type of grade to what Blackdome did, so 17 grams per tonne. The key thing with these mines at Braylorn are that they extended down to about 2,000 metres below surface. So we're looking at similar type of mineralisation at the Elizabeth part of our Blackdome-Elizabeth project. The Elizabeth deposit at the moment is only drilled to about 200 metres of vertical depth below surface, and is open along depth, at depth and along strike. So we see significant potential to be able to expand these resources at Elizabeth in particular. So just a little bit more on the resource. This resource was the resources were done by SRK in 2009 and 2010. As I said, these will be superseded shortly when we add in the additional 80 holes and re-report these to the JORC standard. The main thing that we think will happen as a result of adding in the 80 holes, most of those were infill holes, so we don't expect much of a change in the grade or the ounces there from the initial update. But what we do expect is a good portion of that Elizabeth resource in particular to move up the geological confidence ladder to the indicated category, which will allow us to support a PFS with that resource, and more importantly will allow us to focus our drilling next year on expanding the resource rather than having to get it up to a higher level of geological confidence. So there's a picture of the mill. The mill, I visited the mill once while we were doing the DD on this project. Looks like it's in very good condition. The key thing with the mill is it's had the last assessed replacement value of that was about 80 million Canadian, and the last assessed cost to get that back up and running and refurbished and operating again was in the order of about 4 to 5 million Canadian dollars. So significant value that we've been able to pick up with this mill. Clearly too, the fact that it's a proven past producer, so you don't have a lot of the usual risks around things like metallurgy. The metallurgical recovery in the Black Dome operation was around about 93% from flotation and gravity. So the exploration potential and the upside that we see here, these results that you can see there are from the last drilling. Now most of those are infill drilling, but they just give you an idea of the types of thicknesses and grades that we're looking at with these vein systems. The key points here are that the existing resource is only on 2 of the 6 identified mineralised gold veins at the Elizabeth project. And probably the most important thing there is that these types of systems, we know that they can extend to significant depths and they can be mined economically to significant depths as well. Similarly at Black Dome, which is where the mill is, we've got plenty of exploration potential that we'll be looking to hit really hard in April when we get out there and start drilling. Lots of newly discovered veins or gold mineralised veins that were discovered in the last drilling that was done at the project that haven't had resources declared on them due to insufficient drilling at this stage, but we'll look to really get in there and build this resource base as quickly as we can. We see that's where the real value in the project will lie. So, as I said, the acquisition has just completed, so this is all very new to us. We're still going through the process of developing our exploration programs for next year. We will be progressing the PFS on the existing base case project based on that initial 300,000 ounce resource, but at the same time we'll be really hitting this hard with exploration drill programs and resource expansion drill programs commencing in April of next year. So now on to what is our second string project, given that we've just completed the Canadian acquisition. The projects in Ecuador are, I consider them to be much higher risk, but certainly much higher reward potentially, given our location, which I'll get onto in a minute. We're located directly adjacent to the Fruta del Norte mine that many of you will be familiar with. That's owned by Lundin Gold and has just commenced production just in the last week, I believe. We're directly on the western side of that particular project. As many of you will be aware, Ecuador has become a hotspot in recent years with many of the majors working in there. And in fact, our tenement position here is we're surrounded by both Lundin and the Lundin Newcrest joint venture licences, as indicated on that map you see there. So the 2 green licences are ours. The rectangular licence there is what we call Rio Zaza, directly adjacent to Fruta del Norte, and then the more green fields Valle del Tigre, which is located to the northwest of Fruta del Norte. So this Rio Zaza licence has seen drilling before. Basically, the drilling that was conducted here before, the interpretation of that drilling after it was finished was that it didn't reach the required target depths. So whilst there were some indications of gold mineralisation and some indications of the right types of altered rocks, the drilling reached only to around about 500 metres of vertical depth, which is about the depth that Fruta del Norte occurs. The subsequent interpretation, probably best illustrated by the section at the bottom there, just shows that what we're looking for is faulted off blocks of the same stratigraphy that hosts Fruta del Norte, but we need to drill to about 800 metres instead of 500 is the upshot. So we'll be doing that as soon as we get a water permit. We'll be expecting to get that in February. We'll be out there drilling that in March, and we'll spend probably about $1 million on that. Valle del Chuga is a bit of a slower burning prospect. We'll be flying a geophysical survey over that in December, which will help us to define drill targets there moving forward. And in summary, we'll have a very active work program next year. We'll be starting off with reporting the resource in January for Blackdome-Elizabeth. We'll be hopefully drilling out in Ecuador in March, and then April onwards we'll be drilling very, very aggressively at Blackdome-Elizabeth, looking to expand the resource base as much as we can during next year. Thank you.